Good morning. Welcome to the Video CPA. This is Michael Scott. I am your host for the Video CPA. And today we're going to talk about understanding self-employment taxes. You notice I don't have myself up here in the corner today. I've been having some problems with my camera and syncing with the audio. So anyway, I'm not running my picture today, but you all know what I look like by now. All right, so let's get into it. We have our affiliate marketing disclaimers and our educational disclaimer. So what is self-employment tax? And self-employment tax basically is what you would pay as an employee, okay? It's the same as what you would pay as an employee when your company withholds Social Security and Medicare taxes from your paycheck. Now, when that happens, if you're an employee, they withhold from your paycheck, and then the company goes along and matches that the same amount as what they withhold. Okay, so of which they withheld. So, self-employment tax basically allows self-employed people to receive the benefits of the Social Security Administration and of Medicare when they retire. So you'll be able to draw on the Social Security Administration for retirement income and be able to get some of your health paid by Medicare when you retire. And these are pretty valuable type benefits as long as you qualify for them. So who pays it? I mean, if you are a small business and you file a Schedule C with your 1040 tax return and you make money, you have to pay self-employment tax. If you're a small farm or a ranch and you file Schedule F with your 1040 tax return, you have to pay self-employment tax as well. And if you're a partner in a partnership and you receive a K-1 with self-employment income on it, you're going to have to pay self-employment tax as well. So those are the areas, those are the people that usually become subject to self-employment tax. And like I say, there's some benefits to it because it does allow you to participate in Medicare and Social Security Administration's retirement programs. All right, let's look at what the rate is. If you're an employee, for example, you pay FICA of 6.2% and Medicare of 1.45%. So what is taken out of your paycheck each time is 7.65%. Okay. What some of you may not know is that your company has to match that. So they have to pay also 7.65% for you, and they pay it into the Social Security Administration. So the combined total is 15.3%. And that's what's paid in on every paycheck that you have. Now, there are some limitations on the amount of money. It does stop at certain limits, but for this video, let's just assume that you're subject to self-employment tax and Medicare tax. So 15.3% is what employees have that are paid into the Social Security Administration and to Medicare. If you're self-employed, you don't have an employer, and so you have to pay both sides. So the combined rate for self-employment is 15.3%. And that's 15.3% of your net income from your business, your farm or ranch, or from your partnership, your percentage of that partnership. Okay. So that's the rate, 15.3%. Now let's look at how the tax is actually calculated. And it's really done through an income statement. So if you file a Schedule C, for example, which is a small business form, or a Schedule F, which is for ranching and farming, those forms are basically an income statement. You start with your revenue and you take off your expenses and you come down with the net income of that business or ranch. That net income then is subject to self-employment tax. And that rate is 15.3%. So in this example, you've got $10,000 worth of revenue in this particular year. You've got expenses adding up to over $3,000. So you've got almost $7,000 worth of net income from self-employment, and you apply the self-employment tax rate to that, and you owe $1,060 in self-employment. Now, let me say this. Self-employed individuals should be making estimated tax payments throughout the year, and they should have calculated in the self-employment amount as well. What I do find is a lot of people that are new to business don't really understand self-employment tax, and so they don't make their estimated tax payments, and so at the end of the year, they'll come in and they not only owe income tax, but they owe self-employment tax. So please understand that this $1,060 here is just self-employment tax. It's not your income tax. So on top of this, you may have another 15 to 20%, 25% income tax rate on top of this. So instead of owing $1,060 at the end of the year, you might owe $3,000 or $4,000 or $5,000, which is crippling to some people that are starting their business and they don't know anything about it, and they come in to a CPA and we do their taxes right, and they actually owe $4,000 or $5,000, and they're horrified and they just don't believe it. But this is the way the system works. Okay, so let's talk a little bit about how this is what this looks like on your tax return. So if you're self-employed and you have a Schedule C or Schedule F, you're also going to have, as part of your tax return, your 1040 package, a Schedule SE. And that SE schedule is a self-employment schedule. Okay, that's going to list your self-employment income, and at the bottom of it, it's going to calculate what your self-employment is. Okay, it's also going to calculate what your deduction is for self-employment. Used to be that there wasn't any deduction for self-employed people, and then the IRS or the government came up with an idea, and they said, well, we're screwing self-employed people, and so we're going to come up with this deduction. Well, let me tell you very clearly that you're still being screwed as a self-employed person, okay? This did not equate you to an employee, but they threw us a bone, really. And I've been self-employed, and I've been an employee, and I can tell you that I don't know what it is, but the IRS must think that all self-employed people take every deduction that they possibly can, whether they deserve them or not. And so this is the right thing to do by screwing them on self-employment tax. But anyway, let me get off my high horse and talk about how this works a little bit more. Okay, so if you think that your deduction of half of your self-employment is actually equal to the 7.65% that's being paid in for you by your employer tax-free, you got to be nuts, okay? So this is not apples and apples, but anyway, it is a deduction. So on the bottom part of the tax return, the front of the 1040, in the other adjustments area, you will see a line that says you can deduct half of your self-employment tax that you paid. Okay. Now that's a deduction. A deduction is different. It's not a dollar for dollar. Okay. When you receive 7.65% as an employee, paid in for you tax-free, that's dollar for dollar. All right. Had they given you a credit instead of a deduction, it would have been equal, but they didn't do that. So this is where we stand right now. Like I say, it's good that you're part of the self-employment program. I am 71 years old now, and I never thought that I would see any Social Security at all in my life. I thought I was paying it in and it was going to go down the drain, but it's still there. And the Social Security Administration is in good shape. It's going to, if you look at their reports anyway, they say that they're going to be well funded through 2030 something. Medicare not so much, but certainly Social Security is. And these benefits, I can tell you that Social Security is nice to receive each month as a retired person, or mostly retired. And Medicare is very good insurance, and so you will be happy at some point in time that you paid this in. But it is pretty punitive at the time you're trying to pay it, and you're trying to feed your family and stuff, and the government's got their hand out wanting 15.3% of your net income in addition to income taxes. So be aware of that. It's nice to have been with you today. I hope you understand this and understand self-employment a little bit better. If you have any questions, put them in the comment area. I appreciate you tuning in. And if you like the video, hit the like button. If you haven't subscribed, please subscribe to the channel. And I will be back with you in the future.